The ultimate 50-30-20. Dividend Strategy. Build your $10,000 per month passive income machine. Most investors waste decades stuck in confusing, outdated retirement plans that barely keep up with inflation, only to realize too late that their safe strategy left them broke in retirement. But what if you could break free from this trap and build a portfolio designed to pay you thousands of dollars every single month, forever? Imagine a simple yet powerful plan that grows your wealth in 3 unstoppable ways: through rock-solid dividend ETFs, unstoppable dividend aristocrats, and fast-growing tech giants turning profits into ever bigger dividend checks. This is the 50-30-20 dividend strategy, a blueprint anyone can follow, starting with just $100,000 to build a $4.5 million fortune that pays you $9,427 per month in pure passive income. No risky speculation, no gambling, no market timing. Just time-tested, proven wealth-building assets compounding day and night, whether the market rises or falls. In this ultimate guide, you'll see exactly how this strategy transforms $100,000 into a self-sustaining retirement machine, producing cash flow that grows bigger every single year. Ready to unlock the plan that could make you financially unstoppable? Let's dive in. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button, and don't forget to turn on the bell for updates on all our latest content. For most people chasing financial freedom, the idea of retiring early or living comfortably off passive income feels like a distant dream, complicated, risky, and only accessible to financial experts or Wall Street insiders. Traditional retirement advice often centers on building 401ks, bonds, and the stock market in broad terms. But what if there was a clear, tested, and actionable blueprint that could guide you step by step toward creating a sustainable, ever-growing income stream? The 50-30-20 dividend strategy offers exactly that, a logical, diversified, and wealth-building plan that has the power to turn a modest initial investment into a financial machine that pays you thousands every month, forever. At the heart of this strategy is simplicity married to power. Instead of chasing speculative stocks, complex option trading, or trying to time the market, which rarely works, this method focuses on owning the world's highest quality businesses and index ETFs that have done one thing consistently: pay and grow dividends. This plan isn't about fast money or risky trades. It's about building a fortress of reliable cash flow that grows automatically, thanks to the magic of compounding, reinvestment, and dividend hikes. By splitting your portfolio into 3 distinct, purposeful categories: powerhouse dividend ETFs, Dividend Aristocrats, and dividend growth machines, you are setting yourself up for long-term, recession-proof wealth creation. The 50-30-20 blueprint. Explained. The foundation of this strategy is its allocation: 50% in broad, powerful dividend ETFs, 30% in individual dividend aristocrats, and 20% in fast-growing dividend companies that not only pay, but also raise their payouts aggressively over time. Why this split? Each category plays a specific role. First, the 50% allocation to dividend ETFs, such as SCHD, Schwab U.S. Dividend Equity ETF, and VYM, Vanguard High Dividend Yield ETF, provides a rock-solid, diversified base. These ETFs pool hundreds of the best dividend-paying U.S. companies, reducing individual stock risk while delivering reliable income. SCHD focuses on quality U.S. companies with long records of financial health and dividend sustainability. VYM casts an even wider net, scooping up high-yielding large-cap stocks across industries, providing stability and buffering your portfolio against volatility. Together, they generate a blended yield around 3%, while capturing the upside of the U.S. economy's long-term growth. The next 30% targets individual dividend aristocrats, elite companies that have raised dividends every single year for at least 25 consecutive years. For this plan, we recommend three iconic names: Microsoft, Coca-Cola, and Lockheed Martin. Each represents leadership in its field: tech, consumer staples, and defense. And collectively, they offer unmatched stability, pricing power, and reliable dividend growth. Microsoft benefits from enterprise software domination. Coca-Cola commands global brand loyalty in beverages, and Lockheed Martin sits at the center of U.S. and allied defense spending. These companies not only reward shareholders with dividends, but often outperform the broader market thanks to their resilience and cash generation. The final 20% flows into dividend growth machines, companies like Apple and Broadcom that combine fast earnings growth with rising dividend payouts. Apple has transformed from a growth stock into a dividend powerhouse with massive free cash flow. Broadcom is a semiconductor giant with a rapidly rising dividend and exposure to the explosive demand for connectivity and cloud infrastructure. This slice of the portfolio is designed for growth first, but with dividends growing at double-digit rates, your future income potential here can outpace inflation and most other investments. The 100K example: starting small, thinking big. Let's break this down with an example starting portfolio of $100,000, an amount within reach of diligent savers or those rolling over a retirement account. How would this plan work? 50% in SCHD and VYM ETFs, $50,000 expected yield, 3.50%, annual income, $1,750. 30% in Dividend Aristocrats MSFT KO LMT, $30,000, expected average yield, 2.0%, annual income, $600. 20% in Dividend Growth AAPL AVGO, $20,000, expected average yield, 1.50%, annual income. $300 total annual starting income, $2,650, or roughly $220 a month. But that's just the start. Because of dividend reinvestment and growth, this modest stream is about to explode. 10-year projection, the transformation phase. When dividends are reinvested, your portfolio's income-generating power compounds. Using conservative assumptions, 6% price growth plus a 3% average yield reinvested, the 100K portfolio can balloon to approximately $356,000 in 10 years. But here's the real surprise. The income stream grows too. New annual dividend income, $8,900 monthly passive income, $742 a month. That's an over 300% income increase without adding any new money, purely from growth, dividends, and reinvestment. The beauty of this system is that each dividend check buys you more shares, which pay more dividends, which buy more shares, and the snowball builds. 20-year projection. The wealth machine fully operational, fast forward another decade, and the portfolio blossoms into a $1.27 million asset, delivering a staggering $31,740 annually in dividends. That's $2,645 per month, likely enough to cover or significantly supplement living expenses for most retirees. But it's not just about the size of the income, it's about safety and growth. SCHD and VYM will continue capturing market-wide growth. Dividend Aristocrats will keep raising payouts. Microsoft and Coca-Cola almost never miss a hike. And the growth-focused holdings like Apple and Broadcom will likely raise their dividends by 7–10% annually. This dynamic mix defends against inflation, market crashes, and sector-specific downturns. 30-year projection. The millionaire maker stage. What happens after 30 years? The answer: this portfolio becomes a retirement powerhouse. Under conservative compounding assumptions, it could exceed $4.5 million, throwing off nearly $113,000 annually in dividends, or $9,427 per month. That's true financial freedom. With no need to sell principal, this income can fund your lifestyle forever, growing every year as dividends increase. Think about that. Starting with just $100,000 and letting time, discipline, and dividends do the work, You become a multimillionaire and enjoy nearly $10,000 per month in pure cash flow. No stress, no market timing, no gambling. Why this works. The power of compounding and quality. This plan succeeds because of two unstoppable forces: time and quality compounding. ETFs like SCHD and VYM provide instant diversification and reliability. Dividend aristocrats like Microsoft and Coca-Cola are financial tanks. They earn billions in free cash flow, are world leaders, and have unbeatable pricing power. Apple and Broadcom bring earnings and dividend growth that beat inflation and add excitement. Most investors underestimate compounding. They check daily prices, fear crashes, and sell early. This strategy demands patience, but rewards you 10x over. Reinvested dividends mean every payout buys more income-generating assets, creating a perpetual wealth machine. Let's not forget history. SCHD has outperformed many other dividend funds since inception. VYM's yield cushion protects against bear markets. Microsoft and Coca-Cola have paid and raised dividends through wars, recessions, and pandemics. Apple's cash pile could fund decades of payments. Broadcom's software acquisitions and chip business are powering the digital revolution. You're investing in excellence, not speculation. Risks and how they're managed. Of course, every strategy has risks. Tech companies like Apple and Broadcom could face disruption. Defense budgets could shrink, hurting Lockheed. Consumer preferences might evolve away from Coca-Cola products. But diversification helps control these dangers. If one stock struggles, the ETFs and other holdings balance the impact. Dividend cuts are unlikely among these elite businesses, but possible in extreme events. That's why ETFs form the portfolio's core, limiting reliance on any single company. In a worst-case scenario, the broad market exposure of SCHD and VYM remains intact. Meanwhile, the dividend aristocrats are chosen precisely because they've survived and thrived through decades of upheaval. Another risk is interest rates. High rates can hurt stock prices temporarily, but they also signal inflation. And companies that raise dividends like these outpace inflation over time. Plus, the strategy's yield rises alongside the market, protecting purchasing power. Can you really retire on this? Yes, with patience and discipline. $100,000 isn't enough to retire today, but this system shows that if you start early or consistently add savings, the plan scales beautifully. With $250K, $500K, or $1 million invested, the income grows proportionally. For example, at $500K initial investment, your projected income at year 20 could exceed $13,000 per month, financial independence by any measure. Even if you're starting small, $5,000 or $10,000, you can build this machine. Every dollar invested is a brick in your future income fortress. Dividend reinvestment accelerates progress, and adding fresh capital amplifies it further. The key is to start, stick to the plan, and resist the urge to panic when markets wobble. Conclusion: the 50, 30, 20 dividend blueprint is your freedom plan. Forget complicated strategies, forget Wall Street hype. The 50, 30, 20 dividend plan works because it's simple, evidence-based, and time-tested. You are combining the unstoppable wealth-building force of the market, via ETFs, with the proven reliability of dividend aristocrats and the turbocharged growth potential of tech and innovation leaders. The result? A portfolio that grows your wealth, protects your purchasing power, and most importantly, pays you every single month forever. Whether you want an early retirement, a stress-free financial future, or to leave a legacy for your family, this blueprint lays out exactly how to get there. Even better, it requires no active trading, no market predictions, no sleepless nights watching stock tickers. Just buy, reinvest, and wait. Your future self will thank you. So, is the 50-30-20 dividend blueprint the key to your financial freedom journey? Are you ready to build your $10,000 month dividend machine? If so, start today. Time is your most valuable asset. Put it to work and let compounding do the heavy lifting. Your wealthy future is closer than you think. Thank you for watching Wealth Echelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.